Welcome to part 1 of my Technical Analysis Foundation course, Introduction to Technical Analysis. So this video is brought to you guys by Femex. I'll talk more about them later in this video. Let's go over the content for this week's lesson. First, we're going to talk about what technical analysis actually is, what its limitations are, and what its purpose is. Then we're going to talk about how to actually make money using this skill. We're going to talk about how to make the most of this course. Whether you're a beginner or advanced trader, there's going to be something for everyone, and you will come out a better trader. Then we're going to have a sneak peek into the coming weeks and what topics we're going to cover. So I'm going to go over the usual disclaimers. This video is for entertainment purposes only. Any information spoken or written should not be interpreted as financial advice. Carry out your own independent verification of facts and data. Don't just take my word for anything. I am not a financial advisor. I do not hold any relevant qualifications. If you seek financial advice, speak to a professional. And finally, trading is an extremely risky activity. Your trades are your responsibility, so trade at your own risk. What is technical analysis? Technical analysis is the study of the market primarily through the use of charts. So we use charts like this, which give us two pieces of information, price and date, and we use this to come up with strategies in which we can make money in the market. As technical analysts, we make the assumption that all information is reflected in price. So whatever is happening in the world which could possibly affect the price is reflected in the movement of the price. We don't need to know why the price moves, we just need to know that it does. We assume that human psychology leads to repetitions of the past. No matter what changes in the world or the market, humans are still governed by the same emotions. And because of this, we are able to find patterns and inefficiencies in the market, and we aim as traders to profit from this. Technical analysis is not absolute. It's a common misconception that technical analysts are able to forecast what the price is going to do. This couldn't be further from the truth. What technical analysts can actually do is determine probabilities of the price doing certain things based on our previous two assumptions, that human psychology leads to probable repetitions of the past, and that all information is reflected in the price. So it's not an exact science, but more a combination of an art, a science, and a bit of common sense as well. Let's talk about some of the limitations that come with technical analysis. Technical analysis, as I've just said, is not absolute. Technical analysis alone does not tell you how to protect your capital. Just because you know what the price is likely to do doesn't mean you know how to size your positions, manage your risk, or any of the other skills required to protect your capital. It also doesn't tell you how to do the opposite, grow your trading portfolio. You know what the price is likely to do, but again, you don't know how to size your positions, you don't know how to manage your emotions. There's a lot more which you do not know how to do. You don't know what strategies work and in which markets. You don't know how to figure out whether a strategy is viable or not. You don't know when to stop using a trading system. You don't know how to choose a trading style suited to your personality. The list goes on. Following on from limitations, let's talk about some misconceptions. Performing analysis and making money are not the same. Why? Well, I've just explained to you all the things lacking from technical analysis. Another common misconception, which I find a lot of newer traders have, is that they're on this search for that one secret strategy or formula that will instantly start making them money in the markets. It doesn't work like that. If it was that easy, everyone would be trading. In fact, it's a lot more difficult. It's more you have to find multiple different skills which you put together, combined with a lot of experience, and only then will you maybe be successful. There are no shortcuts in this game. If someone is telling you you can get rich quickly, they're likely trying to get themselves rich quickly. Always bear that in mind. Leading on from the previous point, but slightly different, there is no correct style. I hope by now I've ingrained the point that this is not an exact science, so trying to debate which style is the best is pointless. There is no exact science here. There are multiple different styles which can make money in the market, and the only thing that can decide if something is viable is whether or not it can consistently make you money over a long period of time. Nothing else will tell you what style is good or not. To consistently make money in the markets, we require a trading system. So what's a trading system? Well, there are four components to it. First of which being psychology. Without the mental framework to execute your trades, even the best system in the world is useless. We are the ones who decide what we do with our account. There's no one stopping us at any moment from completely deviating from our system and doing something stupid which could cost us all our money. Even small things like a little bit of panic or greed forcing you to take profit later or move a stop loss. These things can completely destroy any potential profits your system may give you. So even though it seems obvious and most people think they're not susceptible to these emotions, this is the absolute most important part to any system. In fact, if this course does well, I'm going to do an entire course on trading psychology, going over how people can find strategies suited to them and their temperament, their lifestyles. Next, risk management, also something which will not be covered in this course. All systems face losses. Without sustainable risk management, a system will likely be wiped out before it can make money. Most systems win about 40 to 60% of the time. Now, we get deviations from this, but generally you can assume most traders, real ones, make 40 to 60% of their trades winners. That leaves 40 to 60% being losers. Now, if you don't have good risk management in place, these losers will wipe out your account and you can't actually reap the rewards of your system. Now, let's talk about the bits which technical analysis, what we're studying for the whole of this course, actually helps with. First, the entries. Every trade has a point where you enter the market. And in fact, it's one of the least important parts of your system. If you get the general direction right and you know how to place a good stop loss, you can make money. Even random entry systems can make money if you've got the right strategies in place. Technical analysis will help us with this. We can identify where to enter the market. Next, we have exits, which also are helped tremendously by technical analysis. We use this to make sure our winners make us more money and our losers lose us less money. More important than entries for sure, but still a step below psychology and risk management. In some ways, it is a part of risk management, how we exit our trades. If I've done my job well up until this point, hopefully you can see that technical analysis is just one piece of a much larger puzzle when it comes to trading. Now, I'd love to make a lot more trading courses to help make you complete traders, but these take an immense amount of time and energy to put together. The only reason I was able to put this much time is thanks to my sponsors, Femex. If you guys want to support me and increase the probability of getting more courses, just use my link in the description below to sign up to Femex, and that's it. Thanks a lot, guys. Let's continue. So what does technical analysis actually help with? Well, it helps you develop a hypothesis for entry and exit strategies. You would have seen this from the previous slides. These are important parts of your system, not as important as risk management and psychology, but essential nonetheless. Also, it does actually help with your psychology, not directly, but when you understand why your system works, you're far less prone to emotional mistakes because you can have a lot more confidence in what you're doing and in the fact that you actually understand it and you're not blindly following strategies. How do we make the most of this course? Let's focus on what your goal is. As you're studying through this course, your end goal is to come out with a consistent and personal framework for analyzing the markets, and you can use the tools taught in this course. You can also mix it with other things you've learned. It's important to focus on what works for you and ignore what doesn't. What do I mean by analysis framework? Well, these are a set of rules and guidelines which you consistently adhere to when analyzing the markets. It is essential for your analysis to have any meaning whatsoever. Because if you're constantly using different strategies, then your past data has no reflection on your current performance or future performance. You can't make any predictions. You can't actually assign any value to what you're doing. Personally, I know a lot of you will be interested. I use a very basic analysis framework. I like to use support and resistance as my primary tools alongside moving averages. You guys will find out what these are and how I use them later on. I also accompany these with a lot of secondary tools, Fibonacci retracements and extensions, candlestick patterns, RSI, volume, open interest. You'll learn about most of these on this course as well. And you guys can make any combination of tools which you want to use yourselves for your own framework. It doesn't specifically matter which ones you use, although some combinations won't make sense as you learn more about what they are. What matters more is, like I said, the consistency and the fact that you personally understand and agree with these tools. So consistency, it's essential. Without it, your trading is entirely random and it may as well be gambling. Next, you've got to make it personal. Take what works for you, throw away what doesn't. If you guys don't understand what you're applying, you're not going to be confident in it. You're not going to be able to adapt it to ever-changing market conditions. And all in all, it's just not going to be very effective, right? So making the most of this course. Now we know what the goal is. Let's talk about little things we can do to help us out along the way. Firstly, take notes, actively learn. Don't just watch these videos and hope the information goes in. Carry out the practice exercises I set. Some of the weeks I'm going to give you guys exercises you can do, which will help you understand the concepts. There's a reason I give these. If you want to make the most of it, I suggest following them. Next, immerse yourself into trading. Keep looking at charts, follow your favorite markets, read around the material, get alternate perspectives, constantly have this idea of developing this framework in your mind, and start figuring out what tools you want to use for your trading. If you use my referral link, it increases the chances of me being able to make more courses like this. So please do. And if you do, DM me on Twitter. I'd like to thank everyone who supports me personally. And if you have any questions, I'll be happy to answer them with regards to the course. Well done for making it to the end of the first week's lesson. Your homework is very simple. Use the link in the description below to follow along my tutorial for setting up your own TradingView charts. Now, if you already have a TradingView setup, that's fine. You may want to have a look at this anyway because I'll be setting up your TradingViews exactly like mine using the same tools, so it'll make it easier to follow along with this course. And besides that, just sit tight till next week's lesson.